So that I was supposed to do this. I was supposed to do this in the new group I created, which I added everyone who registered who registered in March, but I just decided to send the Zoom link here first so that everyone also inside here can benefit from it. Because if I'm sending just to the students who paid in March, there are so many people here too who haven't really gotten the concepts fully. So it's good I just share here so everyone can benefit from it. So basically, why I'm teaching, if you have any question concerning what I'm saying, you can ask, feel free to ask because we won't I won't take much of your time today. We're just going to be very, very fast and brief with everything we're doing. So I think we're recording already. Firstly, I want to make this very, very simple. You understand? I want to make this so simple the way everyone is going to understand. I don't want to complicate things like come on the market, start looking for this kind of signs, these kinds of symbols. No, I want to make it very, very simple for everyone who wants to trade Malaysian SNR. I want to make it very, very simple. It's just my own way of trading it. You understand? It's my own way of trading it. And if you understand that way and you can add your own stuff to it to increase your win rate, it's all up to you. You understand? It's all up to you. So simply, we have we deal mostly with key levels, you understand? So whatever we are going to be doing, you're going to forget about the weeks. Forget about all these weeks in the you see here, all these weeks. We're going to focus mostly on the body of the candlesticks and the body closing of each candlesticks. That's why we use the line chart. You understand? But now, basically, if we are on this candlestick chart and you don't want to be switching from line chart to candlestick chart always here, you can add this indicator, this SMA, this SMA indicator. When I turn it on, see, it has the indicator is going to be on my candlestick chart like this. And what happens, you're going to see your key levels yourself. You can set it the way you want to set it, and the colors, you can set the colors the way you want. It's going to show you all key levels. And if you turn to your line chart, it's the same stuff. You understand? It's just that I didn't make it thick enough. So you can use the indicator. This is the setting of the indicator. You can screenshot this. All what you need to do, just go search SMA. Search for SMA. It's moving average. So you put the, I think, input length 1, close, source to close, offset 0. Everything here, length 14, this one 2, and come to style, MA, black. You can set it to black. You can set the way you want the thickness to be. Okay, let's work with this one. And that's all. Precision to be default. And okay, so now with this, you won't have to turn to your line chart all the time because you already have your line chart on your candlestick chart. For example, you see, if I switch, same thing. So that's just something you may want to do in case you face difficulties switching. You understand? In case you face difficulties in switching. So let's take everything. Firstly, we have there are types of key levels we always want to look out for. You understand? There are types of key levels we always want to look out for. We always want to look for A-shaped key levels. And we always want to look out for V-shaped key levels. You understand? A-shaped key levels is an A shape because it looks like an A. It's a V shape because it looks like a V. So we have these A-shaped key levels, we have these V-shaped key levels. Then we have this one, an A-shaped key level, which turn into a V-shaped key level. That's just simple support and resistance. So this is a key level, price came back to this key level tap. And we have the opposite of this one too. It should be like this. Price breaks, comes back, taps, and go down to the downside. So as I said, I don't want to complicate anything here. Let's just go briefly to what we want to know today. So firstly, whenever you open your chart, you understand. If you have the basic knowledge of SMCs, it's going to really help you. Whenever you open your chart, what do you want to do? You don't want to let's say we're on the 1 hour time frame on NAS. Let me take this off. We're on the 1 hour time frame on NAS 100. You don't want to come on the 1 hour time frame and start looking for anything you're looking for here. No, go to the higher time frame, let's say daily, monthly, or weekly. You want to see where is the market actually going to on these higher time frames. That's the first thing you want to ask yourself. Where is this market going to on the higher time frame? Is the market bearish or is bullish? Using your eyes, looking at what price is doing recently here, we are bearish, right? We are actually bearish. You want to just using your eyes, you should be able to spot it. And now, to make it more easy for you, you can now use your break of structures like, okay, yeah, let's say on the daily time frame, we broke structure here to the downside, telling us NAS 100 is bearish. You understand? If you go on the weekly time frame is bullish actually. It's bullish actually. You understand? The weekly time frame is bullish. So we have this short bearish inside our weekly time frame. So you can take advantage of this instead of going to the weekly to look for all the stuff. But you have to take note for your key levels. And now, how once you have noticed the trend of the market, second thing you want to know is ranges. You understand? You want to know which range the market is moving in, sorry. And you want to know from where the market is leaving and where the market is going to. That's so now, how do we confirm a range? Let's say we are on the 4 hour time frame, for example, on the H4 time frame. What do you want to look out for? You want to first look for a major break of structure. Let's say here is a high price. Want to see price breaks this high. Yeah. Want to see price breaks this high. Please mute yourself. Want to see price breaks this high. That's a break of structure. We know we are bullish. Where is our range? Our range is from this low to this high. You understand? Here's your range from this low to this high. Because we expect price to give us reversals inside this range, sweeps internal range liquidity, and head up for external range liquidity. Where is our external range liquidity? These highs and these lows are our external range liquidity. So I always tell you, price always leaves from internal range liquidity to external range liquidity. So whenever price have swept internal range liquidity, price is going to go up to sweep the external range liquidity. That's the uses of ranges. You understand? So we have this range. How do we confirm our range? You understand? Because you won't just meet any break of structure and you start saying this is your range, here's your range low, yes, here's your range high. You understand? So now, how do you confirm your range? For example, here, for instance, we have price, this is a major high. We expect price to break this high to the upside before we know this is our range. But now we have to confirm our range low and we have to confirm our range high, because most of the time, what are you going to see on the market? You're going to see price doing something like this, break structure already here to the upside. And what happens? You won't know when the market is already, like when your range is complete. You understand? The market can just break, or it may continue going up. You won't know when the market have actually, like these mini trends we have inside here. You understand? These substructures inside here, you won't know when it has changed to be bearish. You won't know when price is retracing to come back into your range. You understand? So now, that's where the problem comes in. You have to be able to know these ranges. And how do you know them? We have a major break of structure. We have a major high, which is this. What happens? We want to see a sweep, a break of structure. You understand? That confirms our range low. We want to see price gives us anything you want to give here. Once the price go to the upside, and what happens after it has broken this structure here? What do you want to see again? You want to see a sweep to the upside. Price should break structure to the downside. This is all what we want to see if whenever we want to confirm a range. Here's our break of structure here. Sorry. Here's our break of structure here. You understand? So now, where's our range low? Here's our range low and here's our range high. So here are the zones we want to focus on. We want to look for anything we're looking for inside this zone here. You understand? Because we have this sweep and we have this break of structure. And everything here is supposed to happen on the same time frame. You understand? So let's say if you're on the 4 hour time frame, you have this major break of structure on the 4 hour time frame. Where do you want to see these confirmations? On the same 4 hour time frame. You don't go one time frame lower. No. You understand? When you're looking for ranges, you want to see this on the same time frame. A break here, a break here, and we want to see here a break to the downside. So now, once we have gotten this, we know price is just going to give us a little bit of retracement. Like let's say price may come here. You may have a sell at this point. you sell to this zone, price comes below our premium, below our equilibrium point, which is our discount zone before buying. You understand? That's where you want to always use your Fibonacci. You place it from this high to this low. You see, we have this our equilibrium point in the middle, where above here is our premium and below here is our discount. You understand? And you understand, if you trade SMC, you understand we always want to buy at the discount zone and we always want to sell at the premium zone. You get, but now what happens sometimes, price will not always come to this discount zone before buying. Sometimes it just comes somewhere inside the premium zone and it buys off because it has already swept internal range liquidity. So the reason why price is retracing, coming down here, is looking for internal range liquidity to sweep. Are you getting? It's looking for internal range liquidity to sweep. Once internal range liquidity has been swept anywhere inside this range, you understand? But it's always advisable to use your FIP tool because you want to see. Let's use our FIP tool. Let's use our FIP tool. Okay, let's place from this low. If you're buying to the upside, do you see? Now, here's our discount, here's our premium. We always want price to come below this our equilibrium point, this discount zone, before we look out for buys. But there are times like if let's say for instance,
So I thought the guy even entered the trade one by one.
please mute yourself.
But when I check the profit is almost the same thing. So
Please mute yourself. Mute yourself.
how come
Philip Daniel, can you mute yourself? All right, so now what happened? We always expect price to come down to our discount zone. This is our discount here before we buy off. But what happens if we have liquidity in this at this point here? If we have liquidity here, price is going to sweep this liquidity and it's never going to become below this our 50% level. I hope it's clear. It won't come below this our 50% level. It's just going to buy off from here. I hope I'm making sense. Price is not going to come below here. Whenever you are seeing internal range liquidity here, it's going to sweep internal range liquidity and head for the upside. So that's just how this range stuffs work. You understand? But now, depending on you, the way me I trade, right? For example, yeah, if I come here and let's say I've marked out this my major break of structure to the downside. Let's say anywhere, let's say. All right, I have this major break of structure to the downside. You understand? I want to see, let me see, for example, this one. I think I have a break of structure to the downside. Yeah, somewhere around here. Yeah, okay. Here's the break of structure. So now how do I confirm this? I have this sweep. How do I confirm my range? I have this sweep. I have this sweep and price went to the upside, came to the downside here. So now for me to confirm my range low, I need a sweep and price reverse to the upside now, and I'll have a sell somewhere around here, which that's when price is going to come to my premium zone before I have a sell from there. I hope I'm making sense. So that's just how you look for your ranges. That's just how you look for ranges. So now again, I think we're discussing on how. Hold on. I think we're discussing on how to look for, like, once you open your trading view chart, what you should look out for. So first you want to look for a break of structure. You want to ensure price is bearish or price is bullish before you want to look for any move. That should be on the daily, weekly, or monthly time frame. You always want to look depending on, like, let's say if you're a scalper or depending on the type of trader you are, you understand, you know the type of time frame to look out for. But for me, I always want to look out on the daily, weekly, and the monthly time frame. Those are the time frames I always want to look out for my bias or direction. So firstly, price is bearish here. You understand? Once any question. When looking for ranges, knowing the bias of the market is obligated, obligatory, or calculative. When looking for looking for buyers, you must not use ranges. You use ranges just when it's necessary. You understand? You use ranges just when it's necessary, Stella. You don't need to, you must not worry yourself all the time looking for ranges, because not all the time you're going to see a perfect range, which have the sweep and break of structure and all those stuff. You just need to be able to trade smart. So firstly, you want to see if price is bearish. You want to go on, let's say if we're on the daily time frame, is price bearish? Yes. You understand? Now you can use your Fibonacci tool to look for like where your range is starting and where your range is ending. You wait for price to come to your premium. If you're looking for sales, you wait for price to come to your premium zone and you look for key levels in that area. Look for key levels in that area. So on this trade, I think we had a key level here. I was showing someone this trade yesterday. I don't know. And I always show you guys how I take all my entries. I always show you guys how I take all my entries. I don't know. Just that I've been busy lately. Sorry for that. So we have this A-shaped key level here. How do you know it's an A-shaped key level? You turn on your line chart, you're going to see we have this key level. This is an A-shaped key level. So these A-shaped key levels are levels where these key levels are levels where we always expect price to like react from. You understand? And just know price move from key level to key levels. Like every move in this market, price is from price left from another key level going to another one. Are you with me? Price always leaves from one key level to another. Price move from before you see any move in this forex market, there must be a reason why price is going to that direction. You understand? There must be a reason why price is going to that direction. So I'll come back to this. I'll explain why I took this trade. I'm just making sure I don't go off topic. So let's continue. Now, what do you want to look out for whenever you come on the market? You want to look out for your where price is heading to, and from there you want to be able to look out for your key levels. And mind you, whenever we are looking for key levels where we want to take any trade from, we always use the A shape and the V shape. We don't use the open close. We use the open close sometimes when it's necessary, but don't always come out on the market and start looking for open close key levels to start looking for a storyline from there. I always use open close key levels. Sometimes I use open close key levels just for entries. You understand? Or for continuation entries. But if you're looking for a storyline, you need a V shape or an A shape. So what happens if on the daily time frame we have an A shape key level like this? You understand? We have an A shape key level like this. You just need to mark out your A shape key level. Turn on your line chart. You mark out this sharp edge. You understand? Mark out this sharp edge on your A-shaped key level. And what happens? Step one time frame lower. That means if you're on the daily, go to the 4 hour time frame. On the 4 hour time frame, what are you going to on this daily? Sorry, on this daily, this is your A-shaped key level here. We have this A-shaped key level. You mark it out. What do you expect? You expect price to reverse. You expect a reversal, like a candle reversal from here, which we have a week like where's this stuff? You want a week. I want this in there, not large enough. All right. So now we always want to see these reversals. You understand? We always want to see these reversals here on the daily time frame. But not all the time you're going to see it. If you see the one which close above our key level, is still valid if you have your lower time frame confirmations, which I'm going to show you. You understand? But in case you don't have any lower time frame confirmations, we have this rejection on the daily time frame, still on the same time frame where you found your key level. Let's say this is the daily time frame here. We had this key level. Price came to this key level, tapped above the key level. You understand? And close below. You need to see this close below your key level, below your A-shaped key level. Once price have closed below here, what do? You go to the H4 time frame. You go one time frame lower. You understand? So one time frame lower, which is the H4 time frame, what do you want to see? You want to see price give you this. You want to see price give you this on the H4 time frame. Are you understanding? In case you don't see this on the H4 time frame, go to the 1 hour time frame. So you have 1 or 2 time frame lower to look for this. But I always advise you look for it on the second time frame. That means if you're on the daily, you have your key level on your daily, you go to the H4 time frame to look for your break up, so your sweep and break up structure. So you want to see price sweeps, you want to see price break structure here. That's the sign of reversal. That's your confirmation. telling you price is leaving this key level, heading to the next key level. Are you getting? That's your confirmation. You know, price is leaving this key level to another key level. This is the beginning of a storyline. You understand? So price is going to move from this storyline to the next daily storyline. Price always moves from storyline to storyline. If you've gone through all the PDFs I've sent you, see the same thing over and over in the same stuffs over and over, over and over. All the PDFs are the same. It's not like another one is not saying another thing while the other is saying a different thing. The both PDF, all the PDFs are sent are saying the same stuff, saying the same things, just understanding key levels and all those things, reversals and everything. So as here we had this daily key level. You're seeing, for example, we had this daily key level. Here's an example. We had price came to this key level. Turn on your candlestick chart. Price came to this key level, tested this key level, and we had a reversal. Are you seeing? We had this reversal here. This was a reversal. It closed below. Normally, we're supposed to start looking for confirmations on the 4-hour time frame, which is this one. We have to start looking for confirmations here, which this was a confirmation because this is a fresh key level. Here's a fresh key level. On the H4, we had price tap into the key level. We had to see a break of this zone. Are you seeing this? If you turn on your line chart, you're going to see it more clearly. We need to see an external. This is an external break of structure here. Anything inside on the right, on the left side, we have the external break of structure. On the right side, we have the internal break of structures. So we want to see a break of structure or a break of this external break of structure here to the downside before we start looking for sell opportunities. But what happened? It never worked that way. So price instead came up, tap on at this 4-hour key level. We had this 4-hour key level here where price tapped. Then I think I look for a reversal still on this 4-hour because I didn't want to go down to the 1-hour time frame and start confusing myself. I had to look for this was where I expected my confirmation, this reversal here. So we had price break this one with a long ass candle, this one. So price break this. We had this was our break of structure. Turn your line chart, you're going to see this the only structure where I want price to break, which is on the left hand side, because I'll explain to you guys, always mark this out. Mark this guy out. Mark where there was a touch of this candle, a touch of this on the 4-hour time frame. Mark where there was a touch of this key level. It should be this one. This was a touch here, this one. So mark where there was a touch so that you don't get confused. You understand? You don't get confused. So this was our break of structure. Price broke here. And what happens? I had to start looking for my trend line confirmations. These are my trend line confirmations here on the 4-hour time frame. I always look out for it on the 4-hour time frame. 4 hours, 1 hour, 30 minutes, 15 minutes. Yeah, it depends on that. But I always end all my analysis on the 15 minutes. I don't go down to 5 minutes. No. So we had this trend line conference 1, 2. It's not a confirmation, but a conference where that's where I had my entry. And I think on the 1-hour time frame again, I explained the same entry, the same setup to you guys in the group. On this 1-hour time frame, I had this one. Yeah. You get, so that was a sell. And again, I noticed this sell, but I didn't take this one. If I go to the 4 hours, you're going to see this sell here. This was a continuation because I told you price moves from key level to key level. These are external range liquidities, internal range liquidities here. Sorry, this is an internal range liquidity. Here's an external range liquidity. So price always, once price have swept this internal range liquidity, price is going to head down for our external range liquidity. So we had price came here, tap, swept this one, retraced again, tap at this point and went down. And you could use your normal trend line for this entry. We had first touch, second touch, break of structure to the downside. And what happened? Price came, tapped here and sold off. But I didn't take this one. And I think USD JPY. I had something again on USD JPY today. USD JPY. Okay, I had this one on USD JPY. Simple. Let me see daily. Okay, I think it was H4. I had this on H4. I had price came to this H4 key level, this one. Because I think we analyzed this stuff the other day. I think on the daily. One time we analyzed this one. You can see this. We had this A-shaped key level here. Turn on your line chart. You're going to see this is an A-shaped key level. We had this A-shaped key level. Price break this A-shaped key level to the upside. You understand? So what happens? This A-shaped key level is automatically going to turn into a V-shaped key level, which we can see this here. So what happened? Price came back, tap this key level, we had our confirmations, which we had this buy setup. And I explained to you guys because I drew these lines here. I explained that these lines are where I expect price to form reversals. This one here, you can turn on your line chart. You're going to see, I think there were three or four. We had one, two, and three. I told you guys price will actually react from these zones one, two, and three because we had the QMR here. You understand? So price was likely going to react from here. So that's why I already knew this zone was marked. So I was waiting for price to come here and I look for reversal signs. I don't just come and start placing trades from here. I look for reversal signs. I look for confirmations. With those same confirmations, if you see them on the H4, you have your trade on the H4. You still look for them on the 1 hour. You have your trade on the 1 hour. So look for them on the third on 30 minutes or 50 minutes to refine your entry, to be more sure of your entry. Just look for all those this break and reversal. You understand? This QMR stuff. Always look for it. It's very, very important. So we had price came to this A-shaped key level. Price came. This one, price never tapped into the A-shaped key level. You can see this price never tapped into the A-shaped key level. The second one, price tapped into the A-shaped key level, and we had a break of structure still on this H4 time frame. You understand? I don't want to look for these things on lower time frames. I always want to stick on this H4 time frame because it's going to give me more accuracy. You understand? It's going to give because if I have a break on H4 time frame and you have a break on the 15-minute time frame, mine is definitely going to work. You understand? Mine is definitely going to work. So I had this break on the H4 time frame, giving me a confirmation that I'm already bearish. You understand? I'm already bearish. And where is my range? Once I've broken structure to the downside, you understand, on the 4 hours, where's my range? I expect my range should be this high. I expect my range should be this high. Sorry, this one. To be this high to this low. We get primary to be this high to this low. You can go down, I think, on the 1 hour time frame to look for your sweep and break of structure. You should have a break of structure since small break of structure inside here. Let's try to see if we have. Let's try to see if we have. We have here, we have a sweep. You can see this, we have a sweep here. We have a minor break of structure here. Here's our break of structure. Telling us this is the beginning of a range, but here, I don't think we had a sweep. We had a break of structure here. We had a break of structure here. Are you seeing? We had a break of structure. They're telling us this range is already confirmed. We had this range from year to year. You can use your Fibonacci tool to see from this high to this low. Where is price coming back to? Price coming to our premium zone before selling. Are you seeing price coming to our premium zone before we look out for sales at this zone? Price must come to our premium zone, but it's not really a must. Sorry, it's not really a must. Sometimes if price have swept in, internal range liquidity is going to sell. So we had this internal range liquidity, we had this other one internal range liquidity, and always have your internal range liquidity before you take any trade. You understand? Always make sure you have it. It's more safer working with liquidity than when there's no liquidity. It's more safer to work with liquidity than when there's no liquidity. So let's take this guy off. What happened? I think I've gone down too low. Okay, on the H4, we had price break this low. So you just need to be patient. You understand? You just need to be very, very patient. You can take buys from here. Once you've gotten your range, you can take buys from here. Like you're actually counter trading. You can take your buys from here, which is very, very risky. But you can still take buys from here after you have this break of structure on the H1. You see, after you had this break of structure, what happened? Price came to sweep this liquidity inside here. Maybe tap at a valid key level. Let's check H4. I told you guys always look for your we have your confirmation for your entry should be on the higher time frame. Don't never forget that. You understand? That's the secret main pole or no. Your confirmation should be once you're trading key levels, your confirmation should be on the higher time frame. You get if you have an entry, if you're looking, let's say on this 1 hour, let me take this out. On this 1 hour time frame here, you understand? I already had this break of structure here, for example. For instance, I had this break of structure here. And now I'm expecting price to come below here, maybe sweep this one as liquidity. Let's say, for example, for instance, this is liquidity here. Let's mark it out. Even though it's not that clear, but let's just say this is liquidity here. You get it has already been formed. But now I don't seem to find any valid setup here to take it as like to look for a buy here. Simple. Go to the higher time frame. You're going to spot it. To the higher time frame, you're going to see turn on your line chart. Any other level here, we have just a V-shaped key level. Are you getting? We have just a V-shaped key level. Mark out that V-shaped key level. Risk it. You're not going to die. Just mark out this V-shaped key level. Set it. Let's say set the buy limit here. Set your stop loss below. You understand? Or you can still wait for it to come there. Look for your confirmation. What happened? Price actually came there. Use this low, tapped, and we had this minor buy. So you could start actually set your stop loss below here, or you can set it here, depending on the kind of risks you always take. So what are you expecting? You're expecting price to buy to this high. Yes, you can target this high, for instance. This is the 1 hour time frame. So if you're buying here, you target this high. If you're targeting that high, stop loss should be below, let's say below this guy, below this other block here. I see. You have your counter trading buy, but that's not what we're looking for. That's just for examples. If you want to look for more trades, if you're an aggressive trader, you always want to look for setups. You don't want to just be idle. You can take the buys like that. But me, I always want to wait for my main setup. So I had this liquidity insight here, which price actually came there. Then I had these levels. I had these levels. First of all, I was looking out for this one. I was looking out for this one. Yeah, but when I went to the 1 hour time frame, I noticed something different. I noticed something different. Immediately after liquidity, I think I had MC H4 again. H4 should be H1. All right, I had this level here. I think it was fresh. Price broke, pass broke. Yeah, it was a fresh zone. Yeah, it was a fresh zone. So that's why I actually marked this one. And I set my stop loss above here on the 4 hour time frame. I set my stop loss above here on the 4 hour time frame. So I will actually show you guys how to look for entries. You understand how to look for entries? You just use QMR. It's very easy. Use your QMR. Turn on your line chart. You're going to see your QMR. Use it. It's very, very easy. It's very, very basic. Use your QMR. SMC. Never leave SMC. SMC is very, very important. So I had price come back to this zone. We had this tap here and we had this sell to the downside. I targeted this low and I had my trade. So let's see again. Something else. Something else. On GU. On GBP USD. I think there was something there. Let's try this broker. Forex.com. This one. GBP USD. I think we're having a range formed. Let me see if the range has been formed. Mm, Not yet. I want the structure yet to be broken first. This one. I want the structure to be broken before I can confirm my range. Before I can confirm my range. But just know before this, all these buys here on GU. Let me show you guys what happened on GU. This thing is actually very, very simple. I think it was on the weekly. Let me see, it's on the weekly or daily. Okay, it should be daily. Daily. What happened? This was my the beginning of my move on GU. Yeah. I had simple. This QMR was the beginning of everything. This QMR, yeah, was actually the beginning of everything. I think this was when I refined. Yeah, that was when I refined it already. But this was the beginning of everything, yeah. This QMR level. V shape respecting the QMR level. Price actually came, swept liquidity. Every day was surely internal range liquidity somewhere here on the lower time frame. So price we swept this external internal range liquidity. And where are we targeting? We're targeting this external range high. Are you seeing? We're targeting this external range high. That already tells you you're bullish. You understand? That already tells you you're bullish on everything because still on GBP USD, I still expect price to come right to this point. Are you getting? I expect price to come right to this point. So what happens once you're already like you already know each move, anything happens in the market is for a reason. You get anything happens in the market is for a reason. Any move in the market is for a reason. So I had this one, this buy from here. You could use your confirmations to take it, go lower time frame down here. Look for your break of structure. Look for your break of structure. This was the break of structure here. Price, this was our key level. Price tap here. It should be our break of structure. Turn on your line chart. You see it clearly. Yeah, it should be your break of structure. Break of structure. What happened? Price will go up, come back. What? How are you going to confirm this? Yes, yes, a daily fresh key level. Daily fresh key level here waiting for you down here. Here's your entry, your buy entry. You buy from here, sniper. You start targeting the whole of this high from here on the daily time. So you have so many days. You start targeting from here. Start targeting this high from here. You can place your trade here. If it depends if you want to be closing and taking other trades, but here's where you're going to TP. You understand? And price eventually going to come from there because you already understand ranges. You understand your ranges. So now all these reversals are what you're going to be looking for your re-entries and all the stuff. Where you're going to be looking for your re-entries and everything. I think we should go back to the weekly time frame. I think this other one, this other setup here, price uses this one as liquidity, came down, tap at this weekly fresh key level. We had this weekly fresh key level. I had this buy, this one. So I think I had this buy here. We should get your confirmation on. Yeah, we had this price tap here. Use this tool, this line to place it where price tap. That's if we had our key level on the weekly time frame. This is our key level on the weekly time frame. Price came, tap the weekly time frame. We had this key level. Look at, we have also a rejection. We had this rejection and price closed here. You get, so you can mark now this guy, or you go on the lower time frame, which is the daily time frame. Here is it. You mark it out. Where's our break of structure to the left? Here's our break of structure here. Turn on your line chart so you see clearly. Here's a break of structure. Should be so okay. This week here, price break this week. I always also when if price break with a week, I always take it because on the 4 hour time frame is something different, and on the 1 hour time frame is something different. So I always consider most of the time when I'm looking for storyline, I also consider week breaks. You understand? So we had this break slightly, and we had this reversal. This was liquidity. But I think this trade actually I was looking for this A-shaped key level here, but price never got into it. Use your line chart. You see, price never got into this level. That's why I missed this entry. I missed this one. So here was where the buy began. We had everything to where price is now at the moment. So now what's happening on GU? Normally, we're heading for this high, this external range high. So this external range high is going to be swept. I don't think price is going to come back to this point below here. I don't think price is going to ever come back down here again till this high has been taken out. That's what I know. So on the daily time frame again, we had this key level, A-shaped key level, V-shaped key level, sorry. Turn on your line chart, you're going to see clearly. And what happened here, we had also a QMR. We had this sweep price tap here. So this is already your range from year to year. Here's your range. Here's your range here. Let's check. Okay, still on this daily time frame. Here's your range. Because we have this sweep here. Use your line chart. You can see clearly. We have sweep, price broke structure, and we had here price use this one as our sweep and broke structure here to the downside. Can you see? That's just on the daily time frame. Price broke structure here to the downside. So you can actually look after this. You can look for sales against the zone because there must obviously be reversals here. Where the reversals here, where price came back to this key level, this one, though on fresh, cross with a candlestick, became fresh again, became fresh. Then we had these reversals to this point. Yeah, again. I think your entry, your trade already begun. Trade already begun here normally. So now price came tap into this our V-shaped key level on the daily time frame. What do you want to do? One time frame lower, which is H4. Where the price tap this candle? What do you want to do? Mark out that candle. So now, if we look left, where we consider as our break of structure? Turn on your line chart. from here, looking left. Where's our break of structure? This guy here is the most recent zone to use as a break of structure. So we expect price to break from this guy. We start looking for buy setups. Turn on your line chart. That's on the 4 hour time frame. We have price break here. Add this buy to the upside. Simple. Once you've gotten this your setup, I think we had these things here as sweep. We had this strong low. We had this strong. Let me take out this key level. So we had this strong low. Now, what I look for, you have to look for liquidity inside here. Look for your liquidity inside here and expect price to come down below. Whenever price have swept liquidity inside here, price is heading up. You understand? Whenever price have taken out liquidity, internal range liquidity, price is heading up for external range liquidity. And where's your most recent external range liquidity? This guy. Yeah, it's one. That's your most external range liquidity. Where price is heading to for this guy, price is heading for this guy. What do you want to do to confirm this one? I think just on this daily, you can just see that okay, we have these guys, we have this one, we have this one too. Okay, let's go to daily time frame. Daily time frame, you're going to see your entry. Daily time frame, we have a sharp V-shaped key level from here. Just mark out from this V-shaped key level, you pull it, take out this guy. Just go one time frame higher. Whenever you have a setup, I will say it again. Whenever you have or you're suspecting a zone that maybe there's going to be a setup at this point, just go one time frame higher. Look for a key level there. You get just go one time frame higher, look for a key level. So here was my key level. One time frame higher, which is daily. Go back to H4. And I had this sweep. Yeah, I had this sweep. And I had this break of structure here. Yes, this valid. So what happened? Price actually came down there. If I go down more to refine it, I think we had this first touch. Me, I could normally take this one here as my entry. I could take this one as my buy entry from here. But my stop loss will be below, not just directly under this here. Because I don't see no reason from this side why I'll put a stop loss just below here. You understand? But your stop loss normally, if you're trading SMC, your stop loss should be below your protected low or your strong low, as your stop loss is supposed to be, by the way. But I think if you refine your entry again on this H1 time frame, what happens? You should know refinement. If you refine from this level to this level, this QMR level here, let's see how it turns out. You see where your entry was supposed to be. Yes, your buy entry. Because go to the lower time frame. Don't depend. You never take a trade from the 4 hour time frame like this. Because you're working on a ticking time bomb. Go down again. Yeah, H1. Go down even to 15 minutes. You look for your refinement, sorry, for your refinement. Yes, our refinement. Also, this guy here, you can also set your buy limit here. And just set your buy limit here. You understand? Just set your buy limit here if you wish, actually. But price will normally tap from the one closest to liquidity. So if this is your liquidity, your entry is the one closest to liquidity. Always have that in mind. Your entry. So in case you're looking, you have so many POIs, right? If you have so many POIs, okay, sorry. If you have so many POIs, always look for the one closest to liquidity, and that should be your entry. So we had this one, price came, tap from here, started going. You can still confirm this one again. You understand? Like you can confirm basically everything. You can confirm this one, you look for a break of structure. It should be no. One time from lower. Let's go one time from lower and look. If price tap here, what should be our break of structure? Okay. Price tapped here, first tap. Where should be our break of structure thing? Here should be our break of structure to the left. This one. This is a valid zone. Yeah, this one should be your break of structure to the upside. So once you've broken structure to the upside, what do you expect? Price is going to give you liquidity. After liquidity, look for the zone which is closer to liquidity. That should be your entry. You understand? You can still confirm this other entry again here on the lower time frame. Just like that. So you have two, you're satisfied. But I always want to end on the H1 time frame. Or if I don't see anything clear on the H1, I'll go to the 30-minute time frame. So here's your buy setup from here. Everything confirmed. You see where price headed to this high. I hope I'm making sense. So now I think we have this range confirmed, this range low confirmed. Now we need this other range high to be confirmed. And we understand price is going to normally move. Look for where it's suitable to, after sweeping liquidity inside here, have a buy to the upside. But with this trade, price never came to the premium zone. Yeah, yeah, okay. So I don't know. We already missed the trade. So price never comes like, let's say if you want to sell, you understand. It's not all the time price is going to come to your premium zone. That's why I said whenever price have taken out liquidity and it is satisfied, it's going to head out for external range. Whenever price have taken out your internal range, it's going for your external range. You understand? So it don't really care about it don't really care about all these why did I forget to fast? You don't really care about premium and discount. You get it. You don't actually care about premium and discount. I'm actually forgetting premium and discount. I have so many like so like a lot on my mind. I even forget names of people. I basically forget names of things. So price will not come to your premium or discount once it has seen liquidity. It's taking that liquidity and it's going to go for it. For example, let's say we have something like this. Let's say for a bullish scenario, we have this break of structure here to the upside. You already know if you place your Fibonacci tool from here to this high, here's your range. So we know here's our premium zone and below here's our discount zone. So inside this zone, let's say inside this zone here, we had something like we had something like internal range liquidity here. You understand? So now don't expect price to come below here when there's no internal range liquidity here before it like actually moves up. Price is going to come here, see this internal range liquidity, likes it, sweeps it, see a good valid point of interest inside this premium zone, taps there and buy off without coming to the discount zone. You understand? It just depends on satisfaction, where price is satisfied. And no, whatever I'm showing you won't happen 100% of the time. You get it won't happen 100% of the time. If you want to make money, I have my own way to make money from this trading stuff. Simple. Look for an amount of setups daily. If you're looking for 5 setups daily, look for 5 setups daily on 5 different pairs. You're looking for 10 setups daily, look for 10 setups daily on 10 different pairs. Using this strategy, if you're smart enough, if you're very smart, you're going to have a very crazy high win rate. Honestly, you're going to have like a very high win rate, very, very high win rate. So let's say you come, for example, you have your 10 trades a day, you have your $100 in your account. Separate that $100 to 10, 10, 10 to $10 to $10 each. Risk $10 per trade. That's all. Risk $10 per trade. Take TPs where TP is supposed to be taken. The most important thing in trading isn't about finding your entries, by the way. It's about knowing when to exit your trade. You get it's about knowing when like to say this is already enough for me. I should like go out of the trade or I should remain in it. That's one of the most difficult things in forex trading. You understand? So be able to do your risk management. You understand? Risk management is not about using 0.01 lot size and targeting small, risking small. You are never going to make money that way. Risk management is simply knowing I have $100. If I separate this $100 into this amount of accounts, I can be able to flip this without losing my money totally. You understand? That's risk management. Risk management is not about using the minimum lot size. No, that's not risk management. You understand? So just keep up sharing the setups. When I give assignments, you guys never ever do the assignments. So that's why I just stop sending assignments. When I give assignments, you guys never do the assignment. So I just stop sending assignments and all those things. I just stop doing it because nobody's going to do it. But I like you guys to continue sharing setups, share setups, help one another. That's the only way we are going to grow. Help one another, be there for this person. If this person needs something, help that person. help the person. Everyone, I want everyone inside here to be able to grow together. And as I said, we are not going anywhere. I'm here forever. We are here forever. Unless someone is already too better and the person decides to leave, that one is all right. But we are here forever. If I have anything, I will share here. This strategy is not going to work. It's not going to work for the rest of our lives. You understand? Forex market changes algorithm all the time. So what is actually working today might not work tomorrow. So over the time, we are going to be changing. So that's just how it works. If you have any questions, you can ask your questions. You can ask your questions. But we are still going to do our videos for the newcomers I added into the other group. We are still going to do videos there. We are going to do classes, personal classes yourselves, where we're going to start everything in the PDFs I send. We're going to work on everything together. After I rotate on the higher time frame, if you only see a break of structure without a sweep on the H4, after I rotate on the higher time frame, if you only see a break of structure without a sweep. Yeah, yes. If you see a break of structure without a sweep on the H4, it's considered. You can actually take it, Stella. It's actually considered. Any other question? I hope you're good with that, Stella.
Yes, somehow.
All right. If you have any worries again, just let me know. Since I'm not always available in the group to reply your questions, you can ask them here. Alchemy guy, you have any question? Any more questions?
Yeah, I have a question. Good evening.
Yeah, good evening. Good evening. Okay. Any other question? Abiola. Abiola is silent today.
Hello.
Hello?
Hello.
Hello, yeah, I can get you. I can hear you.
Yeah. Okay. According to all the whole thing you just explained, I got some things. So all I just want is for you to just, okay, when you open the chat, number one, look for this. Number two, look for this. Yeah. So I just want you to just summarize everything, like
Yeah,
one, two, three. You get?
yeah.
So that's just what I just want you to just explain.
All right. So this is how you're going to do it. Let's say you decide to trade GBP USD today. First thing you want to look out for, what's your daily trend? You understand? Just using your eyes as a trader, you should be able to like know where the market is heading to. You want to be able to know where the market is heading to. So first, you should be able to visualize the trend. Just looking at it without drawing any lines, be able to see your trend. And to facilitate it for you, you can go on the higher time frame, let's say daily or weekly. You add a break of structure there. That break of structure, any major break of structure means your trend is going to that direction. If you have a bullish break of structure, means your trend is bullish. If you have a bearish break of structure on the higher time frame, your trend is bearish. It's that simple. First, look for your trend. You understand? And now, once you have noticed, let's say I already know I'm bearish on this stuff. Look for the most major break of structure there. Mark out that break of structure. Are you getting? Mark out that break of structure. And what do you want to do secondly? Go to the premium zone because I said we are taking for a sell example. Go to the premium zone. You look for key levels. Look for A-shaped key levels only, no V-shaped key level because we are looking for sales. Look for A-shaped key level. That's number two. Look for A-shaped key levels. Wait now for price to come to those A-shaped key levels. You get so most of the time you spot these things when it has already come there. You don't have to come and start waiting for it and all those things. You understand? So wait for price to come to that A-shaped key level, tap into the A-shaped key level, look for a reversal. Like for example, price should come to your key level, tap at your key level, and close below your key level. That should be, I think that should be the second or third year. So that's the beginning of your storyline. Now to now understand your storyline, go one time frame lower now. Look for a break of structure to the downside. Once you've gotten your break of structure to the downside, go now. You already have your setup. Be able to see a setup after that break of structure. You're able to see a setup. And what's the setup you want to see? A QMR like this. You want to see a QMR? It's okay. We're using for a sell. You want to see a QMR like this. See, there should be liquidity. You can mark out your liquidity now. You now be able to go to the higher time frame, which is if you're on the 4 hour, go to the daily time frame. You're going to see a valid key level somewhere around here, or an A-shaped key level, which you're going to actually mark out. A new A-shaped key level, sorry. You're going to see a new A-shaped key level where that's where your entry is going to be. Now go to the lower time frame again. 4 hours, 1 hour, refine it. That's all. 4 hours again, 1 hour, 30 minutes, 15 minutes, refine that entry. Wait for price to come there and you see the magic. Are you understanding? I hope it's clear.
Yes, 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 it's clear.
So it's
So,
simple.
in a nutshell, you do start your trading from daily time frame to
Yeah.
4 hours, then 1 hour.
Mhm.
That's how you start.
So for example, if you have an A-shaped key level on the daily time frame, what do you want to do next? It's a question, please. If you have an A-shaped key level on the daily time frame, what do you want to do next? What do you want to look out for next?
Mm,
Do you know what you have to look out for next? I can't get you.
I don't know. I don't know.
Just go to the lower time frame, which is the H4 time frame. You look out for your break of structure. That's all. Because you're trying to look for a storyline. Are you getting? You're trying to look for a storyline.
Okay.
You're trying to look for a storyline. And I've also told you guys, whenever there's a setup, this is your setup. The only setup you should, me, I trade, the only setup I trade, you get now. The only setup I trade is this setup, this one. Liquidity and price comes back here, tap and buy it to the upside. Let's say I already have it here. I have this sweep, I have this strong low, and let's say I have this break of structure here. How do I know this setup is valid? Higher time frame. Get higher time frame. What do you have on the higher time frame? And a V-shaped key level, which I'll mark it out like this. And what do I do now? Back to the 1 hour time frame. Here is the level where I expect price to actually come to and tap. If price was to come back here, will come and tap here and buy to the and give us a buy to the upside. Are you getting? So it's simple. Look for your daily trend. Be able to know the direction the market is going to. You get look for key levels, look for A-shaped key level, look for key levels, V or A-shaped key levels that are going towards that direction too. Wait for price to come to those key levels, tap, and you look for you start looking for your confirmations. It's easy, simple, very, very simple. Any more question? Seeing this question, please, what can we use as a form of confirmation on synthetic? On synthetics, here is my synthetics chart. I had this one here. I had this one here on this daily time frame. Look at this is V10 1S. V10 1S. So this V10 1S, what happened? I marked this zone here as a daily key level. Because look at price is actually bearish, right? You can see price is actually bearish. Because since our highest time frame is the daily, so we just need to understand. We use the daily. We just need to manage with that. Price is actually bearish on V10 1S. What happened? I had this A-shaped key level where price came to. You understand? It's a fresh A-shaped key level, very, very fresh. So price came to, but now when I went to the lower time frame, which was 4 hours, I zoom in here and I noticed price never tapped into the key level. And this price never tapped into a key level. And I was now wondering, I was asking myself, maybe it tapped here, this open close. Yeah, you get. I was asking myself, maybe it tapped at this open close, but I wasn't really sure of it. I wasn't really sure of it, so I just left it alone. You get, I just left it alone, and I didn't want anything to do with it. That's why you see, and it has been reacting nicely because we have look at on the 4 hours. If we have a daily key level like this, what happened? Next H4. What do you want to see on H4? You want to mark where there was a touch. Here was where there was the touch, and look to the left. This is where we want to see our break of structure. This is an external break of structure here. You can mark from the body. What happened? Price actually break here. Turn on your line chart, you see this. Price actually break here to the downside. And what's the next thing you expect? Reversals. You get the next thing we expect was reversals to come, which that's where we start looking for our entries. You understand? That's what we're starting for our entries. So you can still go from after you've gotten these, you can still go to a 1 hour time frame. Let's see if we had anything on 1 hour time frame. I didn't really take note of this guy here because it wasn't actually serious for me. Let me see how will I get this entry back to H4. Let me see H4. Let me see daily. Daily. Okay, there's nothing on daily, just weeks. When there's nothing on daily, just continue, just remain you with your H4. Don't stress yourself again too much. So this is we call this one our last resort zone. This high is our last resort zone. That means if price don't see anywhere it wants to reverse to inside this zone here, it's going to come to this last resort zone here and sell off. You understand? It's going to come to this last resort zone. If it doesn't see anywhere you want to tap here and sell off and or liquidity, you're going to come to your last resort zone and you're going to have a sell. So let me see if I done this guy. This was the thing, yeah, this was the only thing, this last resort zone you could actually take out from this H4. Let's see 1 hour. 1 hour. Let's see this V shape here. Line chart. Price never actually came to the zone. I actually if I was to take this trade, I could miss it. I could miss the trade. I could miss this one. But where is price actually reacting from? Using your naked eyes, you see price reacting from this open close here. You understand? So that's why I always, if I'm not really sure of my POI, I'll wait for price to come. I'll look for the one which is closest to liquidity. And which one is closest to liquidity? This one, because we have liquidity here. You understand? Inside your PO, inside this zone where you want to look for your trade, there will be 3 zones. There will always be three points, which are these. Let me draw them for you. You always see this. There are 3 points inside here where you want to look for your entry. Take note. This is the first one. This is the first one. We have 2. Where will be 3? 3 will be an open close inside here. You get, these are 3 points where you always want to see. So you just need price to come there. You look for a reversal sign. Let's say a pullback. You go to a lower time frame, look for break of structures. This same structure I just drew here. Look for a break of structure. Price to reverse here. I saw someone using a fair value gap. Yes, it's correct. Break of structure. You have a sweep. Break of structure. Price can come, fill any fair value gap here and sell off. You understand? Those you can use it as your confirmation. So we had this one. This was liquidity, closer to liquidity. We had this open close here. I can take this trade because I have this one as liquidity. Are you seeing? I have this guy as liquidity. Price came, tap here. We had a sniper. Price is already selling to the downside. So if price continues selling here, that means I was actually right. That I didn't just take it. So it works on synthetic. Synthetic, the same thing, the same confirmations. The same thing. You can see use trend line. If actually you see a trend line that matches the vibe of the thing, you use your trend line. Let's check V10. V10, 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 V10. Nothing. I hardly trade these synthetics again. Okay, price reacting from here. If you've seen where price is reacting from, you just need to go to a lower time frame. You look for your break of structures as usual. Don't stress yourself. Just make it simple. Make it stupid simple. Go to a lower time frame, look for your break of structure. Mm, Can we see a tested key level like we can see, can we see tested key level on H4 and confirm it onto the 15 minutes? Is it a risky trade? if you see a key level on a tested key level, are you meaning it's on fresh? Are you
No, I
meaning
mean like it has been tested with a week.
has been tested with the week? Yeah, sometimes most of those kind of traits actually work. Most of them work sometimes. Let's say the ones which have already been tested with a week one time. Most of them, but if it's for a storyline, it's all right. You get if it's for a storyline, it's all right because you will still need your confirmations. You understand? You still need your confirmations to confirm everything. You always need your confirmations.
No, like what I mean is if you spot an A shape or a V shape on the 4 hour time frame and then it tests with a week, now you wish to look for confirmation like a sign telling you that price will potentially reverse. Do you
Yeah.
go to the 15 minutes to look for it?
No,
Look
no,
for
no.
break of structure and all this stuff.
Look for the book of structure in 1 hour. Look
Okay,
for it in 1 hour. Don't go right down. Just one time frame lower.
okay.
Don't go too much down. Too much down will no more be valid. Going to weak you out. Any more questions? Any more questions?
Yes, for me, I have my last question.
All right, all
So,
right.
like previously you mentioned that when we see a sweep and we see a break of structure, there are three possible POIs.
Yeah.
The A shape on the sweep and the A shape on the sweep, the A shape on the protected and an open close. But you never mentioned the V shape that was just below. Is it that
Yes.
price doesn't usually react to it or how?
Sometimes it reacts to this V shape, but it depends where the liquidity is stellar. This one reacts to this one, so but it depends. But I know most of these three. It also reacts to this one. There are traits like I have traits where price reacted from this V shape here, but look for the one closest to liquidity. You get
Okay.
if price
Yeah.
left here immediately and came to this point, that should not be an entry. Are you just look at let me show you an example. Take note there. Let's say for example, right, we have something like this. We have something like this. So now what happened? If price just left here, came here immediately, don't sell. Are you getting? Don't sell. That means this one is not the right level. Even if it gives you something like this, reversal signs, don't sell because there's no liquidity here. It may go up now, use this one as liquidity and come now, maybe an open close somewhere here, which is closer and sell off. That's where you should look for yourself. So always make sure liquidity has been formed.
Okay.
So I hope I'm making more sense. I want you guys to do something for me. You today, you send them to my DM. You understand? Send it to my DM so that I'll reply you directly. Send it to my DM. Look for um on the daily time frame, yes. Look for A shapes and V shape key levels that price came, reacted and played out. You understand? Just look for an A shape like this one, an A shape, price came there, tap, reacted, and mark that break of structure there on the 4 hour time frame. Show me the break of structure there on the 4 hour time frame and send to my DM. Please, I'm begging you guys to do it. It's for our own benefit. Just do it for our own benefit. So guys, I need to go. I need to go. I need to go. I need to work on my project. Have a nice time. Just do the assignment and you send to me so that we can work more. I think tomorrow, let me see, tomorrow. Yeah, probably tomorrow we may have a session again. So next week we'll be having session always. So forever we'll always be having sessions. So if you have any more question, you can drop it in the question section. Have a nice time.
Thank you very much.
All right.